Hello everybody, this is AK. I'm back. So today just sharing some news, right? Reading some news and what it could mean for some of us. Some time ago, I made a video on the Chinese debt situation and about how the local government financing vehicles, or the LGFVs, were sitting on a huge pile of debt. And today's news, apparently, I read that they are sitting on a debt pile of 9 trillion US dollars. 9 trillion US dollars, not billion but trillion. So that's a lot of money. That's a huge amount of debt. And so I also express my belief that the Chinese would be able to recover from this crisis, all right, especially the property market crash, but it's going to take time. Right, but still, when I saw this figure, 9 trillion US dollars of debt, it's just mind-boggling, and it just reaffirms the idea that this is going to take a long time before we see things improve. And Xi Jinping, I think, has his work cut out for him. Right, he tightened his control over the financial industry, the IT industry, the education industry. I mean, he has his hands in everything, and things haven't turned out well, right? Foreign investors, of course, have voted with their money. They pull money out of the country at a record pace, and big firms like Goldman Sachs have scaled back ambitious expansion plans in China, right? And the further tightening of his grip, Xi Jinping's grip on the finance industry, isn't helping to make investors optimistic, right? He's been pushing the finance industry to slash salaries, and he even made the finance professionals to study volumes of books with his thoughts, right? So all bankers in the country must study volumes of books with his thoughts. This reminds me a bit of Mao Zedong and his literate book. I think that's a bit extreme, right? And he has also asked the country's largest banks to shoulder some of the responsibility by providing credit support to troubled developers as well as local government financing vehicles, which sit on a 9 trillion US dollars worth of debt pile. So the banks are being asked to do national service, right? People like to think that when Deng Xiaoping opened up China's economy, has become a free market, but it really isn't, right? It's still a communist country. Many things are all centrally controlled. Even if they didn't centrally control things in the past, they can easily centrally control things now, right? And Xi Jinping has done it. So we have to take things with a pinch or a couple of pinches of salt, when we are investing in China. And if we are investing in the banks, Chinese banks, because we think they are cheap compared to Singapore banks, well, now you see the reason, a strong reason why it's cheap in inverted commas. I mean, Xi Jinping can tell Chinese banks to shoulder some of the responsibility, of providing credit support to troubled developers and local government financing vehicles, but they cannot tell DBS and OCBC to do it. Right? DBS and OCBC have 20 to 30% exposure to China, but they are not under Chinese control. They are independent of the Chinese control, their Singapore bank. So this effort to make banks bear some of the cost to help the Chinese economy recover will have an impact on the large, systemically important Chinese banks. But I don't think it will have an impact on DBS and OCBC, not through a direct order anyway. All right. And so just remember, if I were to invest in Chinese banks, I'll remind myself of this fact, and I would size my positions conservatively, because we really don't know what we don't know in China. Okay, and the next thing I want to share is a bit of news I read about BYD and Tesla. Of course, I made some videos on Tesla before. I didn't make a video on BYD. But what I read today in the news was quite interesting. It says that the rally in Tesla's share price has cooled. I mean, that we know, because of weaker sales growth. And there are also expectations are ramping up for China's top electric vehicle maker, BYD. And BYD, unlike Tesla, they have reported record high profits, right? Record high profits at BYD. And is also rapidly closing in on Tesla as the world's biggest seller of pure EVs, electric vehicles. And when we look at their stock prices, Tesla stock price are still up 68% this year, even after the recent pullback. And that's higher than the 28% rise in BYD's Hong Kong listed stock. And analysts are saying that this could be poised for change, right? And apparently, Mr. Market has been feeling quite bullish about BYD. And analysts have also raised EPS, or earning per share projection, for the Chinese company to a record high, right? BYD has posted all-time high sales despite intensifying competition and a broader slowdown in sales of China's new energy car. Whereas Tesla casts a pall over the global EV sector with a grim outlook, just one day after BYD posted their record high sales report. And so now people are saying that BYD is the safer bet when it compared against Tesla in the short term, at least, because BYD has discipline in terms of balancing volume growth with profitability. And BYD also has an exposure to hybrids, which have been gaining market share and contribute to higher margins. So BYD has more discipline than Tesla, and well, that's down to the leadership now. I know I've talked about how Elon Musk is erratic and doesn't seem to be able to focus on one thing at a time. So it has to do with leadership quality. Anyway, that's just the news for the day. So if AK can read the news, so can you. Bye-bye.